All right, let's get into it. Today's lesson's all about debits and credits, and by the time it's finished, you're not only going to understand how debits and credits work, but why they work the way that they do. Let's jump right in. So, all of accounting really comes down to these 6 components. You have your assets, your liabilities, your equity, your revenue, your expenses, and your gains and losses. And what's important about these components and journal entries is that if you're able to understand the linkage between them, for instance, the only time you would ever book a liability is if you incurred an expense. In fact, that's the reason why a liability is a credit entry and an expense is a debit entry, because all entries have to balance, and for every credit you need a debit, or every debit you need a credit. So before we go into the link between all of these 6 components, let's talk about what each one of them are. An asset is something positive. It represents an economic inflow to your company. We kind of understand this intuitively. It's something good. It's something your company wants to have. Assets are positives. A liability is a negative. It represents an economic outflow to your company. It's something like an expense that you're going to have to realize throughout your business, and it's an IOU. It's something that is a negative to your company. Now, equity represents the value of your company. Why? Well, you're probably familiar with this formula from your accounting courses. If you took all of the assets, all of the positive, and got rid of all of the liabilities, what you're left with is the value of your company. Now, why is that important? Well, the balance sheet items represent the assets, liabilities, and equity or value of your company at a point in time. The income statement items represent a flow through time. So, throughout the year, different business transactions happen, such as your company earns revenue, it pays expenses, and throughout that change, throughout the business that occurs throughout the year, your equity or the value of your company changes. This will leave you with your ending assets, your ending liabilities, and therefore your ending value in your company. So, now let's go over some of the income statement items. Now that you understand the balance sheet is a point in time and the income statement is a flow through time, you're going to understand that revenue is actually the business realization of the assets. See, we said assets represented an inflow. It's an economic inflow to the company. Well, the revenue is the realization through business of that asset. If you look at expenses, an expense occurs throughout the year. So throughout the year, different businesses going on, an expense occurs, and the liability is that I need to book that liability for that expense that occurred throughout business time. And then, like we said, equity changes at the end of the year. Gains and losses also change the value of your company. Now, what is revenue by definition? Revenue is something that occurs, a business transaction that occurs during the regular course of business. What do I mean by that? Let's say I'm Zara, and Zara sells clothes. When I sell clothes as a clothing store to a customer for cash, and I give up clothes, let's try to draw a shirt here. This is my regular or ordinary course of business. Same thing with an expense. If I incur an expense through through a regular course of business, sorry, that's an example from my practice, such as a wage expense. So I'm paying out a wage expense for wage work. I'm paying out cash for wage work. That's within my regular course of business because I need to pay wages to earn business. Now, say I'm Zara and I sell the Zara building. Zara isn't in the business of selling buildings, it's in the business of selling clothes. So when I sell the building for a gain or a loss, it's outside of my ordinary course of business, and that defines if it should be classified as a gain or loss. So now that we understand what each of these components are and what it means, we're going to go through some example problems, and that's going to give us a better feel. when we're looking at the value of a company, now we said the value of the company changes throughout the business transactions that occur throughout the year. Because the value of the company changes through the transactions that happen during the year, we could actually rewrite the formula as equity equals revenue minus expenses plus gains minus losses. Now, to increase equity is represented by a credit. Therefore, if I incur revenue, if I incur that inflow throughout the year, it is going to increase my equity. It's going to increase the value of my company, and therefore revenue should also be represented as a credit entry. If I incur an expense, let's say, if I incur an expense is going to decrease the value of my company and should therefore be recognized as a debit entry. If I incur a gain, likewise, I incur a gain for selling my building. I'm going to increase the value of my company, and therefore a gain should be represented through a credit as well. See, the framework of the debits and credits through the transactions, the income statement components that happen throughout the year, tie into how the equity changes due to this business that occurs in the year, and it can be represented or frameworked like so. Now we're going to go over some example problems to really run this idea home. Once again, say I'm Zara and I'm selling my clothes. So Zara, I sell my shirt to a customer. In return, the customer gives me cash. So what would this look like? I received cash. Cash is an asset, so I would debit cash. Let's say the shirt cost $10. I would debit cash $10. I'm Zara. I'm in the business of selling clothes, so therefore this would be classified as revenue. Revenue is therefore going to increase the value of my company, so therefore revenue is to be represented as a credit entry. Revenue, credit $10. Let's go over another example. Say I'm Zara and I'm paying my employees like I said before. I'm paying my wage, so I'm giving up cash, and I'm receiving labor for that cash. What would that entry look like? Well, I'm losing my cash asset, so I'm paying out an asset. To increase assets is represented as a debit, so I will credit cash. I'm losing cash. Let's say this cost $50. I'm losing cash through a credit, and I incurred an expense because wages would be classified as an ordinary business expense, so I would decrease the value of my company. Therefore, because the value of my company is a credit, expenses would be represented through a debit. So I would debit expense, or I suppose I can name it like wage expense, $50. So there we have our entry. Last one, let's look at a gain or a loss. Again, I'm Zara and I'm selling the Zara building. Now, currently, I have the Zara building on my balance sheet. Under my assets, I have my building listed at, let's say, $500 on my balance sheet. Because I'm getting rid of my building, I'm going to receive cash for my building of the $500. Or, sorry, let's say I sold it for $700. Let's say I sold it for $700 and it's on my books for $500. So I'm receiving cash. Cash is a asset. To increase an asset requires a debit. Cash, $700 we said, as a debit. I'm giving up my building, which is an asset. So therefore, I have to decrease my asset. That would require a credit entry. So I write building. I am going to credit for what it's on my books for, $500. and the remainder would be a gain. Because I sold it for more than it's worth, I received $700 cash, even though it's worth $500. I received a gain that's going to increase the value of my company. So therefore, a gain should be represented by a credit entry because value in my company is represented as a credit entry. So I would book a gain as a credit for the difference, $200. That allows my entries, my left side and my right side, to match, and it's all good. Okay, let me know if that helped. Please leave a like and leave a comment as to what you liked, what you didn't like, what you found helpful, and I hope this helps. Bye.